Monday, April 7th, 2025. Welcome back to the FinWell Daily Brief. This is our 15th edition. And wow, the market closing at 3:30 p.m. today is really painting a dramatic picture, wouldn't you say?
Yeah, it's quite a day out there.
You know, it's fascinating to me how many people are actually plugged into the stock market. Here in India, it's around 6%. Now, if you just kind of zip across the world to the U.S., that number jumps to over 50%. Quite a contrast, right?
Oh, yeah. Huge difference.
So our mission, as always, is to kind of cut through all the noise of today's financial news and data and really try to deliver the most crucial insights directly to you.
Absolutely. And I think what's striking today is the sheer breadth of this decline. You know, it's not just one sector or a couple of stocks. It seems like everything is down.
Yeah, a sea of red is right.
Yeah.
So the Nifty 50 ended the day at 22,161.60, a significant drop of 3.24%. Mid-caps weren't spared either, with the Nifty Mid-Cap 150 closing at 18,005.10, down by 3.59%.
Yeah.
And the small cap space even more affected. The Nifty Small Cap 250 fell by a substantial 3.99% to close at 14,190.20.
Wow.
Even the overall, health of the market, as represented by the Nifty Total Market Index, saw a considerable dip of 3.40%. Closing at 11,293.20.
It really does feel like everything is getting hit.
Yeah, if you're keeping a close watch on your portfolio, you're likely feeling the impact of this. So what's the big story? What's got the market in such a tizzy today?
Well, the main story really seems to be anxieties about a potential global trade war and fears of a U.S. recession.
Okay.
It really brings home how interconnected our world is.
Yeah.
You know, events happening thousands of miles away can have a real impact right here.
So let's dig a little deeper into this trade war talk. How are these global fears actually translating into what we're seeing in our markets today?
One key indicator is the performance of the rupee.
Okay.
In what's called the non-deliverable forward market. You can think of it as a way to gauge bets on future currency exchange rates. But outside of direct trading, the rupee has weakened against the U.S. dollar. It's currently around 85.833 rupees for one U.S. dollar.
And so this weakening, what does that tell us?
This weakening often signals that investors are becoming more risk-averse. You know, when there's uncertainty around things like U.S. tariffs and their potential to slow down the global economy, investors tend to flock to what they perceive as safer havens, like the U.S. dollar. And that puts downward pressure on other currencies like ours.
So the weakening rupee is like a barometer telling us that. The storm clouds of global economic uncertainty are gathering.
Yeah, that's a good way to put it.
Now, we also saw some pretty significant news impacting a major Indian company today, Tata Motors.
Right.
Their stock really took a tumble. What was the story there?
Yeah, Tata Motors stock experienced a very sharp 10% drop.
10%.
Yeah, and the immediate cause was an announcement from their subsidiary, Jaguar Land Rover. They've decided to halt exports of vehicles manufactured in the UK to the United States. And this isn't an isolated decision. This is a direct consequence of the newly imposed 25% import tariffs in the U.S.
Wow.
It's a really clear example of how these trade war anxieties are hitting major Indian companies with international footprints. Imagine the immediate recalculations they're having to make.
A full 10% drop. I mean, that really hammers home just how immediate and significant these trade disputes can be for individual companies.
Yes, it's not theoretical anymore, is it?
Now, shifting gears a bit, we also saw some policy action from the Indian government today concerning fuel exports. What can you tell us about that move?
Right. The Indian government has decided to increase the export tax on both petrol and diesel by 2 rupees per liter.
Okay.
And the thinking behind this is likely to capitalize on the recent significant decline in global oil prices. By increasing the export tax, the government aims to bolster its revenue. However, this isn't a one-sided coin.
Yes.
While it could be good for government finances, it might also squeeze the profit margins of our oil exporters.
Okay.
And we also need to keep an eye on whether this could eventually lead to some adjustments in domestic fuel prices. It's a delicate balancing act.
Interesting. So trying to make the best of a global situation, but with potential ripples right here at home.
Exactly.
Now, amidst all this talk of tariffs, and potential downsides. There was a little bit of news on the international trade front that sounded potentially positive involving the European Union. What's the scoop there?
Yeah, this is a development worth watching. Apparently, following the U.S. tariff announcements, the European Union is now looking to negotiate a reduction in India's car import tariffs. They're proposing a phased decrease, down to 10%. From the current level, which is quite high at 100%, this could be seen as a potential silver lining. Amidst the current trade tensions,
Okay.
if these talks are successful, it could open up a significant market for Indian automobile manufacturers in the long run.
Interesting.
It really highlights how these global trade relationships are constantly shifting and evolving.
So while one major market might be becoming more challenging due to tariffs, another significant market could potentially become more accessible. It definitely underscores the fluid nature of international trade.
Let's zoom out a bit now from your expert vantage point. Considering all this news, what are the key impacts you're seeing across different sectors? We've already touched on autos and energy, but what's the broader picture? Well, as we've discussed, the automobile sector, particularly those companies heavily involved in exports, like Tata Motors and Jaguar Land Rover, are facing immediate headwinds. This really spotlights the vulnerability of sectors that rely significantly on international trade to policy shifts in other countries. The energy sector is also under scrutiny, with the government's export tax increase. While the initial impact might be on the profitability of exporting companies, we need to monitor for any knock-on effects on domestic fuel prices and the overall energy landscape.
Okay, and what about the currency markets and the fixed income space? What signals are we picking up from there?
The rupee's depreciation, as we noted earlier, is a clear sign of the risk-off sentiment permeating the market. Due to these global trade uncertainties, investors are seeking the perceived safety of the U.S. dollar, leading to this weakening of our currency. Interestingly, on the fixed income side, the 10-year government bond yield has remained relatively stable, around 6.587%. This suggests a more cautious, perhaps wait-and-see approach. In that segment of the market, investors in long-term debt might be holding their breath to see how these global events unfold before making any major moves.
So a lot of interconnected pieces moving in response to these global cues.
The complex web.
It is. So for you, our listener who's trying to navigate this information and maybe even manage your investments, what would be your key pieces of actionable advice in this kind of environment?
Well, given the current volatility and this cloud of uncertainty, there are a few crucial strategies to keep in mind.
Okay.
First and foremost, diversification is your friend. Spreading your investments across various sectors and asset classes can help cushion the blow if one particular area is significantly impacted. Secondly, now is the time to really focus on quality. Prioritize investing in companies that have strong underlying businesses, healthy balance sheets, and especially in this climate, limited exposure to international trade disputes. Thirdly, staying informed about global developments is more critical than ever. Keep an eye on those international trade negotiations, geopolitical events that can have significant ripple effects. And finally, it's always prudent to have risk management strategies in place, such as setting stop-loss limits to protect your downside, and perhaps even considering hedging strategies to mitigate currency fluctuations if you have international exposure.
That's some really solid practical guidance for navigating these choppy waters.
Hopefully it helps.
So to bring it all together, today's FinWell Daily Brief has highlighted a significant market downturn, largely driven by growing fears of a global trade war. We've seen the rupee lose ground. A major player like Tata Motors experience a substantial stock drop, directly linked to U.S. tariffs, the Indian government responding with adjustments to fuel export taxes, and a potential opportunity on the horizon. With the EU looking to revise car import tariffs, it's a complex interplay of global economic forces.
And domestic policy responses.
Exactly. And while the current landscape presents its challenges, remember that a well-informed approach and a long-term perspective are essential tools for navigating these uncertainties. Absolutely. So just to quickly recap the key takeaways from our 15th FinWell Daily Brief, we witnessed a significant market decline across all major indices, primarily fueled by fears of a global trade war and a potential U.S. recession. The Indian rupee has depreciated against the dollar. Tata Motors stock saw a sharp decline due to the impact of U.S. tariffs. On Jaguar Land Rover exports, the Indian government increased export taxes on petrol and diesel, and the European Union is seeking negotiations to lower car import tariffs from India in this dynamic market. Staying cautious and making informed decisions is paramount.
Couldn't agree more.
So if you found this briefing valuable, and want to stay ahead of the curve with daily market insights and financial news, be sure to subscribe to the FinWell Daily Brief.
Yes, and you can also connect with us at SOS FinWell on LinkedIn. For more in-depth analysis and discussions, that's SOS FINWell on LinkedIn, and one more time, SOS FinWell on LinkedIn.
And on that thoughtful note, we leave you with a timeless piece of wisdom from the legendary Warren Buffett. Never test the depth of the river with both feet. A particularly fitting thought for today's discussion, reminding us to proceed with caution and careful consideration, especially in the current market climate. Thank you for tuning in to the FinWell Daily Brief.